Hello and welcome to week number 41. Quickly recapping what happened last week. We were looking to short Euro NZD, and the start of the week started playing about a little bit. We got a bit of a dip that I was looking for, but not as grandiose as I was hoping. It looks like market is a little bit skeptical if the RBNZ can actually raise those many rates as they're looking for. So the jury's still out if you're going to get a dip lower on that. Also looking at NZD JPY, where we were expecting some more upside last week. So starting on the 4th of October, we had a bit of an upside, and we had the knee-jerk reaction to the RBNZ, and it's finally another leg high. I'm still expecting these levels to keep chewing through higher levels and possibly even taking out these September 15 highs. So that's about the dynamics we had from last week. Going into this week, there's a couple of things I'm looking at. One of them is being the employment data for Australia. I believe that should give the Aussie dollar a bit of a boost. What we are looking for, what the RBA is looking for in the unemployment rates and the unemployment data is particularly average hourly worked. So looking for more hours worked to get more hawkish on the economy, so to say. So if that comes together, you can expect a leg high on AUD USD. I'm also liking possibly a leg short on GB AUD if that all materializes. If I see the hourly worked is in tandem with what we are looking for. Another thing I like to look at is the 10-year US yield. Something very interesting, and one of my favorite data is out next week, which is the US CPI, and something very interesting happens when the CPI is out. Like literally every single time, it's gonna blow your mind. I've isolated these daily candles by these vertical fading orange lines. I hope you can see them. Depending if you are looking on the desktop or on your phone, you might need to adjust the screen a bit. But basically once a month you get these CPI reads. You seem to get a big shift in the yields. So here we had that on, last time it was on the 14th of September, we had that dip, and from there on it kept ripping. In August, 11th of August, we saw a high created, and then we saw a swing low. Same thing here, 13th of July, we saw a high created, another swing low created, and then 10th of June was the other way around. And 12th of May, high created, huge trend lower. More or less something similar we saw on the 13th of April, where there was a high created, we saw a move lower. In March we saw a low created and a move higher, so on and so forth. So the CPI was incredibly important for the next swing trade to finish off October, which was by far one of the best months of the year. Great volatility, really strong move. We had a good September and a fantastic October so far. So we're looking to build on that as the month unfolds. And the CPI read on Tuesday will be key to do that. What I'm actually wanting to play with or trade on is USDZAR. Now, it's not everybody's favorite pair, not everybody likes to trade it, but there's a big opportunity in that pair. So you're looking at the US dollar against the South African rand. The thing is that the South African central bank is looking to raise interest rates this year still. At least once, and then every quarter they want to raise it. There's a bit of skepticism if they can do it or not, but inflation is running hard. They really need to get on top of this, raise interest rates, rein in inflation. My read on the situation is, as long as the Fed is on autopilot for tapering, they won't be raising rates until the end of next year as the earliest. Very immediate, I would really like to see some downside in USD Rand or USDZAR. That actually plays hand in hand with the risk on view I have for next week as well. So if things come together, if risk is on, risk positive, stocks moving higher, I really like going into Tuesday or possibly post Tuesday. I like to short this quite aggressively to see what sort of lower levels we can explore. I will be keeping a close eye on the S&P 500. S&P 500 really hoping to see some more higher levels as well next week. We have retail sales coming through. Again, we have that CPI read, so there's a lot of good volatility pockets we can jump into. So I'll be using the S&P 500 as a gauge as long as I have this bullish momentum, as long as these lows still hold. I'm really seeing more upside and want to express that on the S&P 500. But also on USDZAR. And as oil is ripping, you can't really ignore what Dow Jones is doing. magnificent moves here. Really, I feel like it's being punished just because of the positioning. I really feel like Dow Jones should be trading higher eventually. So that's the sort of trades I'm looking at into next week. Key is always the US CPI. So if you want to hold off and don't trade until then, I won't hold it against you, because Monday is shot for, I believe it's for Columbus Day in the United States, and on Tuesday we will have chop until actually the data is through. So possibly see the swing trades come together about Wednesday or Thursday going into next week, and pay great attention to these risk on assets. Also the AUD, I feel like they got a lot of movement going into the following week. That's all I wanted to cover today. My analysis on gold and yen pairs, all of that is similar to what it was the last couple of weeks, so feel free to watch those videos. And that's all from me. Wishing you a profitable week. Until next time.